Why is Coin, X and Y, suddenly pumping and trending across the entire crypto market today? The answer isn't just one thing. It's a perfect storm of exchange announcements, massive trader interest, technical breakouts, and raw market momentum all hitting at the same time. What's happening with X and Y right now is exactly the kind of setup that sends small-cap coins into explosive upward moves. The surge began as soon as major exchanges like Binance and KuCoin dropped the news that they would be launching XNY perpetual contracts on August 13, 2025. You have to understand how big this is for a coin with a market cap sitting around just $16.7 million. When giants like Binance and KuCoin introduce perpetual futures with up to 50x leverage, everything changes. Suddenly you don't just have spot buyers. You have an army of leverage-hungry traders piling in, opening long positions, speculating aggressively, and driving insane liquidity into the chart. Perpetual contracts don't expire, so the constant funding rate pressure alone creates a non-stop flow of buy and sell activity that pushes volume through the roof. And that's exactly what we're seeing. A 1,017% explosion in 24H trading volume. The kind of number you only see when a coin is entering full discovery mode. Before this week, XNY was already gaining attention after its CoinEx listing on August 15, 2025, which injected early liquidity and brought the first wave of active traders. But perpetuals listings are a different beast, especially on Binance, where visibility skyrockets instantly. And while Binance removed some old trading pairs on that same day, launching the XNY/USDT perpetual pair made it clear that XNY wasn't treated like a smaller project. It was being positioned front and center for high-leverage trading. That shift alone pulls thousands of new eyes onto the chart. This hype didn't just move the narrative, it moved the technicals. Traders watching the chart saw XNY break above the 78.6% Fibonacci retracement level at $0.0061872. A key resistance that often signals a potential move into a full bullish continuation. Once the price flipped that level into support, momentum traders and breakout traders jumped in. Combine that with leverage from futures traders, and you get exactly what's happening now. Violent candles, rapid price expansion, and an accelerating uptrend. But there's another interesting detail. The overall crypto market is sitting in a fear sentiment zone. Usually, that means traders avoid risk, but small-cap altcoins often behave differently. When the big caps move sideways or uncertainty rises, capital often rotates into small, fast-moving plays where the risk is higher but the upside is massive. XNY became the perfect target: new listings, fresh narratives, technical breakout, and a low market cap that can move fast with even moderate buying pressure. So why is Coin pumping? Because it has the perfect combination of exchange exposure, limitless leverage hype, massive liquidity injections, technical confirmation, and narrative momentum. A small-cap coin getting tapped by Binance Futures is like being handed a megaphone in a crowded stadium. Every trader hears the name instantly. Combine that with a 1,017% surge in volume and a clean breakout above major Fibonacci resistance, and the result is exactly what we're seeing today. A coin that went from quiet to exploding, trending across the market, and becoming the latest altcoin everyone suddenly wants a piece of. Whether the rally continues or cools off depends on how traders react to the overbought conditions, but right now XNY is in the spotlight, and the market is reacting exactly the way you'd expect when a low-cap coin gets thrown into the big leagues. XNY represents a pioneering force in the evolving field of decentralized data infrastructure, specifically designed to revolutionize how data creators and users interact. It is a decentralized, multi-chain AI knowledge protocol built on a hybrid storage model combining on-chain proofs with encrypted off-chain data. This sophisticated architecture ensures both transparency and privacy, fostering a conducive environment for data monetization. Key use cases of CODATA leverage its unique infrastructure to transform knowledge into verifiable and valuable digital assets. This is particularly significant in the fields of AI and DeSci, decentralized science, where data contributors can earn ongoing royalties by allowing their data to be used in various projects. Such innovations address the historic inequities in the data economy by offering fair compensation to data providers. From a tokenomics perspective, the XNY token stands central to the CODATA ecosystem. As of July 2025, the token circulation is reported at approximately 8.2 billion, out of a maximum supply of 10 billion XNY tokens. These tokens serve as a backbone for staking, earning royalties, and driving the network's economic model. Importantly, The token has been gaining traction with listings on major platforms like Binance Alpha and MEXC Global, indicating an uptick in market confidence and liquidity. Kodata's unique features further set it apart from competitors in the blockchain space. By creating partnerships within major DeFi and blockchain environments, and with features like pre-sale and airdrop incentives, it maximizes user engagement and community growth potential. In the world of cryptocurrencies, understanding the market drivers of a project like Kodata, XNY, is essential for both novice and seasoned traders. Kodata, XNY, with its unique position in the crypto landscape, offers intriguing insights into the forces shaping its market trajectory. Market position is crucial for any cryptocurrency, and Kodata has carved out its niche by focusing on the dynamic intersection of AI and decentralized science, DeSci. This positions XNY as a facilitator in the AI data marketplace, impacting its market cap and enhancing its user base. As these sectors burgeon, the demand for Kodata's offerings is likely to see an uptrend, making it a potential beneficiary of these emerging trends. When it comes to adoption metrics, Kodata's continuous pursuit of strategic partnerships and integration into various platforms speaks volumes. With listings on platforms like Kraken, XNY's visibility and liquidity have been bolstered, further enhancing its adoption. Moreover, the successful implementation of its tokenomics model, which includes innovative incentives like royalties for data creators, has strengthened its ecosystem, driving greater participation. Navigating the ever-evolving regulatory environment is another critical aspect. Crypto regulations vary worldwide and are subject to frequent updates that can sway investor sentiment. Any regulatory scrutiny, especially in core markets like the United States, could impact Kodata's operations. If you've been watching the market closely, you've probably noticed something interesting. STBL has been moving quietly, almost too quietly. And if you've been in crypto long enough, you already know what that usually means. Something big is loading. Very big. Because every cycle, there's always that one coin, one project, that builds in silence while everyone else is distracted. And when the next breakout year arrives, that's the one that shocks the entire market. Going into 2026, STBL might be that coin. Here's why. A few months ago, STBL announced a $1 million buyback program. And most people shrugged it off like it was just another headline. But if you actually understand market mechanics, you know exactly what a move like that means. A buyback is a direct message from the team to investors saying, "We believe in ourselves so much, we're buying our own supply." That reduces circulating tokens, strengthens price support, and signals extreme confidence in the long-term vision. Teams don't risk that much capital unless they're anticipating a massive next phase. But that was only the beginning. Shortly after, STBL revealed a partnership with Chainlink. And let's be real, Chainlink doesn't just collaborate with random projects. A Chainlink integration means serious infrastructure, real data reliability, and cross-chain compatibility. It elevates STBL from just another token to a system that aligns with one of the most trusted players in all of Web3. If you're thinking about long-term potential, that kind of backing isn't just impressive, it's transformational. STBL also expanded to BNB Chain, opening the doors to a much wider user base. More liquidity, more access, more market depth. In 2026, the winners won't be the coins stuck on isolated networks. It's going to be the ones that position themselves everywhere. STBL already made that move early. And while all these upgrades were happening, something else slipped under the radar. STBL secured a presence on blockchain.com. That's huge. It means recognition. It means exposure to everyday users, not just DeFi natives. It means when the next wave of retail investors arrives in 2026, STBL is already in their line of sight. Now, here's the part most people overlook. STBL faced insider trading allegations earlier in the year. Controversial, messy, the kind of thing that usually destroys weaker projects. But instead of collapsing, STBL survived. And then it grew, pushed out partnerships. It expanded chains. It improved accessibility. And the price didn't die, in fact, it held strong. That kind of resilience is rare. When a coin can take a hit, stand up, and keep building, that's a coin built for longevity. Even now, the price momentum shows strength despite past fear. While other tokens bleed on bad news, STBL refuses to fold. Quiet accumulation, strong support, whales paying attention. This is the kind of stability you look for when you're choosing which altcoin could dominate in the next cycle. Put all of this together and the picture becomes clear. STBL isn't trying to be loud, it's trying to be smart. It's positioning itself through partnerships, buybacks, expansions, and utility. It's doing the groundwork that usually pays off when a new cycle begins. 2026 is shaping up to be the year where only the truly prepared projects shine. STBL has the fundamentals, the backing, the resilience, and the strategy to potentially become one of the standout performers. If you're looking at coins to consider for the next year's investment opportunities, STBL might be one of the smartest positions to look into. Because in crypto, the ones who build quietly are often the ones who explode loudly. The STBL TGE marks the launch of a 3-token ecosystem founded by Reeve Collins, co-founder of Tether, featuring USST, a stablecoin backed by US Treasuries, YLD, a yield token, and STBL, a governance token. The project raised pre-seed funding led by Wave Digital Assets, which manages over $1 billion. STBL's native token is now listed on Binance Alpha and Kraken. The Binance Alpha launch will occur on September 13th, and Alpha Points holders will receive early access via an airdrop. STBL introduces a yield-splitting model. Users mint USST using real-world assets, retain yield through YLD, and participate in governance via STBL. This contrasts with older stablecoins, where yield was kept solely by issuers. Following the launch, the STBL token surged. It rose over 300%, reaching a price of approximately 20 cents. It has a circulating supply of 500 million STBL and a market cap of around $100 million. The project is rolling out in phases with plans for enhanced governance features, cross-chain interoperability for USST, and staking mechanisms. There is an insufficient price history for STBL, so price predictions should be taken with caution. The STBL price hit its all-time high of 22 cents on September 16th and has traded inside an ascending parallel channel since. STBL reached a new all-time high of 24 cents today, but failed to break out from the channel's resistance trend line. Therefore, it is unclear if the upward movement is corrective or not. The positive sign is that STBL has reclaimed the $0.190 horizontal area and confirmed it as support. Whether the STBL token price breaks down from this support or bounces is key to determining the trend. A successful bounce could cause a retest of the channel's resistance at 25 cents, while a breakdown could take STBL down to the channel's support at 14 cents. If you've been watching Telcoin lately, you already know something interesting is happening beneath the surface, something the charts only hint at, but the fundamentals quietly confirm. Tel is sitting at just above half a cent, up more than 16% in the past 24 hours, and attracting a whisper of attention again. But the question everyone keeps asking is simple: what comes next? And more importantly, what should we expect as we move into 2026? To really understand where Telcoin could be headed, you have to zoom out. Not into the charts, but into the story. Because Telcoin has always been one of those projects that sits slightly off to the side of the crypto spotlight, quietly building things that don't go viral on Twitter but matter deeply to the real world. And now, that quiet work is starting to collide with the mainstream in ways that could shift the trajectory of 2026 entirely. The biggest turning point didn't come from a pump, a tweet, or a crazy news cycle. It came from something far more boring on the surface but game-changing underneath. Telcoin earning a banking charter in Nebraska. A fully regulated digital asset bank license. Not a partnership, not a pilot program, not a marketing stunt. A real regulated bank charter that allows Telcoin to operate legally across the U.S. financial system, issue compliant digital assets like EUSD, and move money in ways that only a handful of crypto-native companies have ever been allowed to. This is the kind of regulatory step that doesn't just boost credibility, it throws Telcoin into a completely new category. And 2026 is the year where this regulatory advantage starts paying off. Because once you're a bank, especially a digital asset bank, you're no longer trying to get permission to innovate. You can actually start innovating. And Telcoin's strategy is crystal clear. Build a global remittance and telecom-powered financial ecosystem that uses Tel as the engine. Telecom partnerships have always been part of the Telcoin story, but now they're expanding deeper into emerging markets. Places where Western-style fintech can't scale, but mobile-first financial tools can. If Telcoin executes, 2026 could be one of the first years where their telecom rails start driving real global usage, something that translates directly into demand for TEL through staking, governance, and network gas fees. And the exchange listings matter too. New listings on platforms like Uphold and Topper bring more liquidity, more accessibility, more reach. These aren't hype-driven meme coin listings, they're strategic moves. More holders, more regions, more ease of entry. When you pair increased adoption with expanded liquidity, you create the perfect foundation for a long-term climb. But like every good story in crypto, it comes with tension. The technical analysis shows that TEL is sitting right below a major resistance zone at $0.0067. Breaking above it could open the door for a surprisingly strong rally. But rejection at that line could send the price back toward support. And this is where 2026 becomes more about structure than speculation. TEL's circulating supply is massive, 91 billion out of 100 billion already in circulation. That means the upside is real, but so are the pressures. Large holders, whales, have been selling into recent strength, possibly taking profits or repositioning. Whale activity can weigh on price short-term, even in a strong project. Sentiment isn't helping either. The entire market is stuck in fear, and Bitcoin season means money tends to consolidate in BTC rather than flow into altcoins. For Telcoin, that means 2026 might start quieter than some expect. But in crypto, fear is often the phase where foundations get built, and Telcoin has spent the last 2 years quietly building exactly that. What really changes the future outlook is utility. TEL isn't a hype token. It's gas for the network, a staking asset, and the governance token for the entire Telcoin ecosystem. So the question becomes, will the ecosystem actually grow in 2026? If the banking charter is fully activated, if the telecom partnerships expand, if the remittance rails go live in more countries, and if stablecoin issuance like EUSD becomes widely used, then yes, usage will grow. And if usage grows, demand grows. And if demand grows, the price reflects it. But the market doesn't move on logic alone, it moves on catalysts. And Telcoin has real catalysts lined up. Regulatory clarity, new countries, new exchanges, expanded mobile integrations, and the potential for network adoption that actually impacts people's day-to-day lives. By 2026, Telcoin could be positioned as one of the only crypto projects operating comfortably both inside regulation and inside emerging markets, a rare combination. So what should people truly expect? Not a random explosive moonshot, but a slow, methodical shift in the narrative. A project moving from the shadows into the regulated financial world. A token moving from speculative asset to functional infrastructure. And a company positioning itself as a bridge between global telecommunications and decentralized finance. 2026 could be the year Telcoin stops being that quiet altcoin and starts becoming the backbone of something bigger. But like always in crypto, it won't come without volatility. Whales will still move markets. Resistance levels will still test patience. And Bitcoin will still dominate cycles. But the core story is changing. And if Telcoin continues on this trajectory, 2026 might be the year where the fundamentals finally begin to outweigh the fear. In the end, Telcoin's future isn't built on hype. It's built on regulation, adoption, utility, and infrastructure. And that's exactly why its long-term expectations look more compelling than ever. The crypto market may be moving sideways, the fear and greed index is sitting at 21, and Bitcoin dominance is still crushing altcoin season. But somehow, in the middle of all that bearish sentiment, one token is exploding like it doesn't care about the rest of the market. Power Protocol is up an unbelievable 188.93% in the last 24 hours, shooting straight to $0.234, and the volume? It's not just high, it's insane. Up over 1,933,907%. That's the type of number you double-check because it doesn't even look real. So what exactly is going on here? Why is power ripping while the rest of the market sleeps? Let's break it down, because what's happening right now is the result of a perfect storm. A mix of hype, timing, fundamentals, and one major catalyst that blew everything open. The biggest spark behind this entire pump is the Binance Alpha listing on December 5, 2025. This is huge. Binance doesn't just list anything, especially not on the Alpha platform, which is known for highlighting projects with strong growth potential. As soon as the listing went public, eyes turned toward power, traders, speculators, airdrop hunters, and even people who had never heard of the project before. Suddenly, power went from a quiet token to a trending name overnight. But the listing alone wasn't the only catalyst. Binance announced that users could claim 375 power tokens using alpha points, and this is where things really started going crazy. Anytime a popular exchange gives out free tokens, the attention skyrockets. People rush in, new buyers show up, traders jump on the chart, and liquidity suddenly comes to life. The claim event poured gasoline on the fire, and interest exploded faster than anyone expected. While all of that was happening, Power Protocol also dropped its white paper, and that timing was perfect. The document detailed the tokenomics, roadmap, and partnerships, including a notable one with the gaming platform Fableborn. Gamers, Web3 enthusiasts, and early investors finally had something concrete to analyze, and the sentiment quickly shifted from curiosity to excitement. The white paper highlighted that a large portion of tokens is dedicated to community rewards and ecosystem development, which is exactly the kind of thing retail investors love to see. And here's the kicker: most team and investor tokens are locked, which means early dumping pressure is basically minimized for now. That creates a sense of security, or at least the illusion of it, which is more than enough to fuel a breakout pump. With 210 million tokens already circulating out of a total 1 billion supply and a market cap of around $49 million, Power is still considered a small cap play, and small caps pump the hardest when volume rushes in. That's exactly what we saw. A tidal wave of new money slamming into a relatively small market cap, causing huge upward price movements with very little resistance. Traders saw the momentum. Then social media picked it up. Then algorithms pushed the trend further. And before long, Power had become one of the fastest moving tokens of the day despite the broader market showing signs of fear. Ironically, even though market sentiment is weak, the Binance listing overshadowed everything. When a major exchange shows confidence in a project, retail follows, even in a fearful market. Now, all pumps come with risks, and Power is no exception. The current explosion in price is heavily fueled by hype, listings, and airdrop excitement. Once the initial hype cools off, the token might see sharp pullbacks, especially as more tokens unlock in the future. Early buyers might take profits, short-term traders might exit, and anyone who bought the top could get squeezed. Volatility is extremely high right now. This kind of move can't stay vertical forever. But at the same time, you can't ignore the bullish potential. The community allocation is large. The ecosystem fund is well-structured. The tokenomics reduce immediate selling pressure. The Binance Alpha Spotlight gives it legitimacy. And partnerships like Fableborn show that Power isn't just hype. It's building something in the gaming space. If the team executes and continues pushing development updates, Power could maintain long-term interest even after the initial pump fades. For now, the chart looks wild, the volume looks unbelievable, the hype is real, and Power Protocol is having its breakout moment. Whether this becomes a temporary surge or the beginning of a larger trend will depend on how the team handles the next few weeks, and how the market reacts once the excitement cools. But one thing is absolutely clear: Power Protocol is the hottest moving token right now, and the entire crypto community is watching to see what happens next. The reason why JasmyCoin isn't pumping like it should is a story that goes way deeper than just a red candle on the chart. And if you've been watching this project closely, you already know something feels off. Because JasmyCoin wasn't just another AI token. There was hype, momentum, crazy expectations, and at some point, everyone believed this project was about to explode into the next big narrative of 2025. But right now, the price action is telling a different story. And the truth behind that story is the real reason the coin has been struggling to move the way people thought it would. It starts with the numbers, because numbers never lie. A 24-hour drop of about 4% isn't devastating on its own, but what lies underneath is the real problem. The 30-day performance is down over 53%, and the 60-day chart looks like a cliff, with more than 92% wiped off. That kind of movement doesn't just happen casually. It tells you the market sentiment has been weakening for a long time. Traders aren't just avoiding JasmyCoin. They're unsure, they're hesitant, and many have already walked away. But markets don't move on charts alone. Someone always lights the match before the fire spreads. And for JasmyCoin, that spark was FUD. Real FUD. Fake news started circulating online claiming the team was dumping tokens, abandoning the project, or secretly planning an exit. And even though Chainopera AI's team came out on October 31st to deny every bit of it, the damage was already done. Crypto traders don't wait for explanations. They see smoke and assume the whole project is burning. Panic selling kicks in, confidence collapses, and the chart starts bleeding. That denial tweet helped, but it didn't fix the emotional damage. Once trust cracks, it doesn't heal overnight. Then, add the second blow, the entire AI sector suddenly went cold. Not because AI stopped being strong, but because traders did what they always do. They chased the next shiny object. This time, it was Binance meme coins. Capital rotated out of AI tokens, including COAI, and flowed into whatever was pumping that week. It didn't matter that AI projects have long-term value. It didn't matter that COAI had a strong narrative. In crypto, hype beats fundamentals every single time, and COAI simply wasn't in the spotlight anymore. Now, the technical indicators are also part of this problem. When a coin trades under its short-term and long-term moving averages, traders see it as a bad sign. COAI's price is sitting under both the 7-day and 30-day SMAs, which means the momentum is still pointing downward. Even the RSI, hovering around 41, is not strong enough to signal a reversal. It's not oversold. It's not bullish. It's just sitting in that painful gray zone where nothing exciting happens. And then there's the part nobody likes to talk about, whale behavior. When the top 10 wallets control nearly 88% of the total supply, fear becomes a permanent shadow over the project. Every time the market sees a big exchange inflow, like the recent move of 55 million COAI tokens onto trading platforms, everyone assumes a dump is coming. Whether that dump actually happens or not doesn't even matter. The fear alone is enough to keep the price from pumping. Retail traders stay cautious. Buyers hesitate. Volume slows, and the coin struggles to break any meaningful level. Combine all of that, FUD that shook confidence, capital rotating away from the AI narrative, technical indicators pointing downward, whale dominance, and exchange inflows signaling potential sell pressure, and you get a coin that simply cannot move the way it's supposed to. Not because the project is dead. Not because the fundamentals are weak, but because the psychology around it has shifted. So the real reason COAI isn't pumping isn't tied to one event. It's a combination of fear, doubt, timing, market cycles, and investor behavior. The moment those things change, the momentum can flip just as fast as it faded. But for now, the chart is telling the truth. COAI is in recovery mode, not pump mode. And the market is waiting for confidence, clarity, and a real catalyst before it gives this coin another chance to run. Chainopera AI, known by the token symbol COAI, represents a unique blend of blockchain technology and artificial intelligence applications, allowing users to verify token authenticity and track on-chain activity. For ongoing updates, the integration of AI and blockchain in COAI creates multiple opportunities for investors and developers alike. By leveraging decentralized systems with intelligent automation, COAI aims to provide seamless solutions for data management, AI-driven analytics, and operational efficiency across digital ecosystems. Gate's listing strategy is carefully structured to balance security and accessibility. Deposits were the first step, starting at 6 o'clock Universal Time coordinated on October 6, 2025. Trading services are contingent on achieving the required liquidity threshold. Once that threshold is met, the platform will immediately activate trading services, allowing users to buy and sell COAI in real time. While the exact trading start time will be announced shortly, early deposits are strongly encouraged. Users who deposit early help accelerate liquidity fulfillment, which in turn triggers the trading launch sooner. This system ensures that the initial trading period is smooth, reducing potential volatility for first movers. The listing of COAI is more than just a new trading option. It reflects the growing synergy between AI and blockchain, attracting a community of investors, developers, and innovators. For traders, COAI offers the chance to diversify their portfolios with a token that combines emerging technology with real-world utility. For Gate, listing COAI strengthens the platform's position as a go-to destination for forward-thinking digital assets. Users benefit from advanced liquidity management, secure deposits, and an interface designed for both beginners and experienced traders. In conclusion, the Gate listing of Chainopera AI COAI represents a significant moment in the evolving world of cryptocurrency trading. With deposits live and trading set to launch soon, it's an opportune time for crypto enthusiasts to explore COAI, engage with its AI-driven potential, and be part of a growing digital community. Whether accessing the web platform or the mobile app, the process is simple, secure, and designed for immediate engagement. Veracity is one of those projects that quietly keeps building in the background while the rest of the market is obsessed with hype coins and short-term pumps. It's the kind of project you look at twice, once because you're curious and the second time because something about it makes you think, wait, this actually has depth. As we move toward 2026, Veracity is slowly transforming from an overlooked token into what could become one of the smartest strategic plays in the next market cycle. What makes Veracity unique is that it wasn't created just to be a coin. It was designed to solve one of the biggest problems in digital advertising, fake views, and ad fraud. The proof-of-view technology they built is not just an idea on a white paper. It's already in use, it's already integrated with real publishers, and it's solving a real billion-dollar issue that companies struggle with every day. In a market full of tokens with no purpose, Veracity actually has something rare: real-world demand drivers. What's even more interesting is how much the project has grown in 2025, even when the overall market wasn't favorable. The expansion to the BNB Smart Chain was a major silent upgrade that many investors overlooked. This single move gives Veracity access to one of the biggest ecosystems in crypto, faster transactions, and a whole new stream of liquidity. Add that to the fiat off-ramp inside Vera Wallet, something many small-cap projects can't even dream of, and you start to see a picture forming. This is a team slowly building a complete ecosystem piece by piece. But the most underrated catalyst is the UAE partnership, where Veracity helped launch the country's first ad exchange through VeraViews. That means real companies, real advertisers, government-level recognition, and institutional trust. And trust is exactly what fuels long-term value. Not hype, not speculation, but trust. If more companies adopt POV and VeraViews, the long-term demand for VRA could grow naturally because the token powers the ecosystem. This is how sustainable growth begins. Quietly, behind the scenes, and then suddenly all at once. Investors love to talk about utility, yet they chase coins with none. Veracity is one of the few tokens with utility built into its core. Not future promises, but actual product usage right now. And in 2026, as ad fraud continues to rise globally, the need for Veracity's technology will only grow. Of course, no investment is perfect, and Veracity does have challenges, especially with its token distribution. With only about 10% in circulation, many investors worry about future unlocks. That's a valid concern, but it's also something that Veracity's upcoming tokenomics update might directly address. If the team brings clarity, introduces burns, restructures supply, or incentivizes long-term holding, the narrative around VRA could flip almost instantly. Tokenomics updates have revived countless projects in past cycles, and Veracity could be next. From a price action standpoint, VRA looks beaten down right now. Oversold RSI, weak momentum, and a long downtrend. But the strongest rallies in crypto often start from ugly charts. Smart investors are the ones who spot value before the crowd wakes up. Veracity is in that phase right now. Overlooked, undervalued, and completely off the radar of most retail traders. That's where opportunity lives. What makes Veracity truly interesting as a 2026 investment is the timing. The market is still recovering, fear is still high, and altcoins are still suppressed. That's exactly when long-term plays are found. Price is low, sentiment is quiet, development is active. And catalysts like the tokenomics update, new partnerships, BNB chain integrations, Vera Wallet improvements, and continued corporate adoption are still ahead, not behind. When you look at all of this together, Veracity starts to resemble the kind of project people look back on and say, I should have paid attention back then. It's not loud or flashy, but it's smart, strategic, and positioned to benefit from multiple industry trends: blockchain verification, digital advertising, fraud prevention, and enterprise adoption. If the team continues on its current track, addresses token supply concerns, and capitalizes on growing partnerships, Veracity might not just recover. It could shock everyone in the next cycle. Not because of hype, but because it has the one thing most crypto projects lack: a real mission backed by real technology. Sometimes the smartest investments are the ones building quietly, waiting for the world to catch up. Veracity might just be one of those coins heading into 2026.
Programmatic advertising automates how brands reach their audience, placing ads where they'll have the most impact, efficiently and in real time. Every online ad you see is delivered by a seamless supply chain of actions. Programmatic advertising begins with brands that want to promote their products. By defining clear goals, whether it's reaching the right audience or boosting sales, they create targeted campaigns that are delivered across various online platforms. To meet their goals, advertisers rely on demand-side platforms, or else known as DSPs. They help ensure ads are delivered to the right audience at the right time. DSPs automatically bid on ad spaces in real time, using data to place ads where they'll make the most impact, ensuring that the right message reaches the right audience. Once DSPs process the campaign details, they hand the data over to supply-side platforms, known as SSPs. These platforms connect advertisers with publishers whose audiences align with the campaign goals. Supply-side platforms, or SSPs, act like marketplace managers for publishers. They connect with multiple DSPs to ensure publishers get the best deals for their ad space. By working with a wide range of advertisers and DSPs, SSPs help publishers maximize ad revenue, managing their available spaces with precision and efficiency. After SSPs find the right publishers, the next step is bidding through an ad exchange, a digital marketplace where ad space is auctioned in real time. Both DSPs and SSPs participate, bidding on available inventory. The highest bid secures the ad space, ensuring the ad reaches its intended audience. With the highest bid secure, the ad space is officially sold. The winning bid, which is essentially an ad, is now ready to move to the publisher's platform and reach the right audience. As the ad continues the journey through the programmatic pipeline, traveling seamlessly from the ad exchange to the publisher's platform, where it will be displayed to the publisher's audience. Publishers are websites, apps, or digital platforms that offer ad space within their content to advertisers. The same ad space that DSPs and SSPs bid for. By displaying these ads, publishers generate revenue and monetize their traffic. For example, a media site can host video ads within its content, giving advertisers the chance to reach the right audience while the publisher earns revenue from that ad space. As the process completes, the ad reaches its intended audience, delivering content that grabs attention and encourages interaction. Seamlessly served within the publisher's content, the ad engages the viewer, leading them to take action, whether it's clicking, viewing, or making a purchase. As the journey comes full circle, the programmatic advertising ecosystem keeps working behind the scenes, learning and optimizing with every ad served. This continuous feedback loop enables advertisers to fine-tune their strategies and helps publishers maximize their revenue. It's a real-time cycle of improvement, ensuring each ad reaches the right audience at the right time in the right place. This is the power of programmatic advertising.